So 2022 has not been a good year in the stock market. And while we are up, we are green today so far at the time of this recording, the overall year has been basically straight down since we peaked right at the end of December 2021, right? But just going straight down with a couple of choppy, moves in there, but the overall trend is down. So one of the big reasons for that lately has been this Russia-Ukraine conflict, and the news is really covering this, and there is a lot of fear in the market right now because of it, because there really is a very real possibility of a bigger war breaking out, and this is absolutely affecting oil and equities and all kinds of things. I mean, the news is just everywhere on this, right? You got Russia-Ukraine right here, Ukraine impact right here, Molotov cocktails, Ukraine right here. You go over to FinViz and click on the news, and there's several mentions of Russia, Ukraine, oil, things like that in this news stream right here. So it really has been at the forefront, and it's been a big reason why lately, anyway, we've seen a lot of movement downward in the stock market. So found this article earlier this morning, how the modern stock market is affected by war, over at Investopedia by Deborah D'Souza. And she went in and looked at every war or battle or kind of, let's see what she calls it, geopolitical events and stock market reactions. So any kind of like, tensions over, let's say, since the 1940s, really. She looked at all of those and kind of pulled some data on them, some really good, interesting data. She has the day that it happened, what happened in the S&P 500 either that day or the day after, right? The 1 day increase or decline, the total drawdown. So how far did the stock market drop until it bottomed out, right? Where we saw the bottom, how many days it took to get to that bottom, and then how many days it took to get back to where the stock market was when that event occurred. So this is really interesting. She takes all of these kind of geopolitical tension events, which, we'll call them like wars or strikes or battles, and she just lists them, right? Everything since 1940. Now, you'll notice over the last maybe 20 years or so, it just has not been as big of a mover as it was in the past. For example, let's look at the Pearl Harbor attack in 1941. 143 days until the stock market bottomed out after that event, right? That, is by far the largest on here, and the second largest being 71 days, and that was Iraq's invasion of Kuwait in 1990. So since then, we really haven't seen anything move the market, for a very long period of time. Look at everything since the Iraqi invasion of Kuwait. It's been 11 days until the bottom, 14, 1 day, 4 days, 7 days, 14 days, 19 days, right? Some of these are significant. 19 days, for example, a Saudi Aramco drone strike in 2019 took 19 days to bottom out and then 41 days to recover. But that's nothing compared to the Pearl Harbor attack in 1941, where it took 143 days to bottom out, and then it took 307 days, almost a full year, until the stock market came back and fully recovered. So I went and took a look at this information, and I thought, okay, how can we use this for our current situation? And I do think we need to use maybe the last 20 years of data here, because everything prior to let's say the Iraqi invasion of Kuwait, it's just different, right? The stock market was totally different from that point on. You can tell in the data, right? Like I was saying, it just has not moved as much from these events since then. We've got the Fed is a big player these days. We've got technology moving the markets even faster, and we've got algorithms and things like that. So the market is just different today than it was 30 years ago and 80 years ago. So I went and said, okay, she's got the averages down here. The averages is 1% drop one day after these events and 5% total drawdown, and on average it takes 22 days to bottom out and then 47 days to recover. And I said, what if we just took everything from 2001 and till today and averaged those out, because I think that might be more relevant to the events today. So I went and basically just added these up and divided them by 10, and you get an average of 10 days until the bottom, right? Everything from the 2001 terror attacks, basically 9/11 and more, and recent, averaged out gives you a bottom out of 10 days from the event. So how can we use that for these days, for today's event? Well, Russia invaded Ukraine on February 24th. Right, so let's go in here and look at our chart real quick. On February 24th, Russia invaded Ukraine, right here. So if we were going off of this chart, we would think the average, the most likely day that the stock market is going to bottom out would be 10 trading days after that. 10 trading days plus, you know, that's 5 days a week plus weekend, so we'll call it 14 days. So we'll say March 10th. On average, it's likely to bottom out around March 10th if we had to pick a day. Right? I'm not saying that it's going to happen on this date, but if we had to pick one, we would say March 10th. And judging by this channel that's dropping, it looks like if we bottom out on March 10th, it would be around this blue line. So let's say March 10th, somewhere around here, somewhere around this, on the S&P 500, 4,050 to maybe 4,070, somewhere in there. That would put us around that blue line. And currently, the S&P 500 is sitting at 4,352. But if we're going to bottom out by March 10th, that means this market is going to take a turn significantly for the worse and head back down to this blue line pretty soon. So today is March 2nd at the time of this recording, and if we think we're going to bottom out March 10th, then we're going to be dropping like a rock over the next 8 days. Now, it doesn't mean that's necessarily going to happen, right? Look at some of these days. The bottom was in 1 day later, right? So 4 days later, 7 days later. I mean, that absolutely could be the case here, or we could have a situation where, you know, look at these, 19 days later, 14 days later. Again, like I said, these average out to be 10 days, and that would give us, or 10 trading days, and that would give us March 10th around 4,050 on the S&P 500. So let me know what you guys think about this. If you enjoyed this, if you like this article, if you want to read it yourself, get further into it, it is over at Investopedia. I will link it down below. But leave a comment. Let me know what you're thinking about, you know, how this Russia-Ukraine conflict is affecting the markets. Are we already at our bottom? Have we already seen the bottom? Which basically happened the day of the event so far? Or do you think we have further down to go? Let me know, guys. Thank you for watching. I will see you in the next video.